Hey guys, Forex Capital here. Let's take a look and see what Ripple is doing today. What is this? Got new stuff here. Oh, I'm gonna put this right here. Sorry about that, guys. Anyways, let's just get back to it. So looking at the daily chart, like I'd always like to start. So, been talking about this for a minute too. We had this massive breakout, which was awesome. Just awesome altogether. They mentioned that we're going to encounter some resistance at the 200-day moving average, which we did. We pierced through that. Then I mentioned that we're going to encounter resistance at this trend line that dates all the way back to June 25th of 2019 to forever. So a little bit over a year. We blasted through that, and I mentioned, hey, your next resistance level will be 25 cents, which we blasted. Now, this is looking bullish overall, which is always a good thing, right? I'm a firm believer that this will be one of those pairs that will be here for a long time because realistically, the banks like it. It's not supposed. This is not too much. I don't know much all the details when it comes to the technology, so I'm the wrong guy to ask. However, I do know this: the banks like this coin. Compared to the other one. So I think this is one of those that will stay here for a while, if not forever. Who knows? That being said, so let's just look at these levels and see what we can expect. I mean, RSI right now, it's looking a little bit bearish. I mean, look at this. We got, basically almost to like 90. Close to it. Now we're pulling back. Just because we get to an overbought situation doesn't mean that it's not going to keep going up. I mean, just look at right here, right? Got overbought, we pulled back, and we still had another rally. I mean, technically two rallies, so that could be the case here. So that's the kind of stuff you have to keep in mind when you're trading, By the way, guys, if you guys liked the video, hit that subscribe button. Don't forget to pulverize that like button because that's the only way you're going to help out the channel to reach to 7 billion people. So we're a community here. We're here to help each other out. And if you get anything useful out of the video, send one friend to the channel. That way they can make money like you're making money. So that being said, so level wise, if we look from the swing high of February 14 of this year to March 13, now one good thing that we have going on is we're holding above the 78% retracement. As long as we're holding above, I mean, this overall looks bullish, period, but looks even more bullish. Now, here's the thing. We have some resistance coming up soon, and this is very crucial resistance. I would say about 34 cents, 35 cents, we're coming up with some resistance. Now, if we pierce the 34 cents, I like where this is going because look at this. I mean, this looks like a funky but potential double bottom. And what is the best play to form a double bottom? I mean, if I just zoom out at the bottom or a double top at the top. So here's 1, 2. I mean, this is kind of funky because this little section right here took too long. But if this does form a double bottom, then we could see, I mean, a lot of the pairs form double bottoms. I call them out, and I hate to sound like one of those arrogant people, but they did play it out. So I watched the levels very closely. So if this is a double bottom, and if we do from the neckline to the bottom, that would put us at about 57 cents, which is pretty good, very good. So I think this pair has a lot of potential. Now, the key for this whole double bottom to form, guys, is right here, 34 cents. Why am I coming up with that level? Well, remember, in order to form a new high, you have to take out the previous high. And if you want to take out the previous high, that's when it gets kind of sloppy. So here's one, February 14 of 2020. It's one touch. Right at about July 19 of 2019, there was another one. And I mean, if I keep extending out the line, you're going to encounter multiple. So 34-cent level is an important level, apparently, to this market. So now, if we have a fake breakout, guys, we could break and then go right back in. I mean, if everything starts pulling back and then gets, it will start pulling back again. So let's just extend this trend line a little bit. So if we do that, I mean, even if we pull back, I'm still bullish this pair, because what we could see is if we have a fake breakout, your first line of the sand is a 29-cent level. If we go below that, I would think if we have a fake breakout, we're gonna blast through the 78% retracement, so the 29-cent, and we're going back to 25 cents. The 25-cent will be an important level. And then if we go below the 61% retracement, or 25 cents, and then we're going all the way back to 20 and 2022, we just have to wait and see how this is playing out, because I think it will more likely retest the trend line, and also will be hugging the 200-day moving average. So if we hug about 22 cents or so, or 20 cents, and then I will be loading up again. This was one of the pairs. I mean, I have a very long-term position on this, so I do have money in here, but this is one of those pairs that the other money that I have that I use as a more short-term, weekly time frame, I did not put money here, and then all of a sudden it rallied incredible. So I kind of missed this rally. So now I'm either waiting for a breakout of this 34 cents. That will put us at about 58 cents, 60 cents. Or a fake breakout of 34 cents and then pull back either to 25 cents, a 61% retracement, or about 22 cents, because that way the 200-day moving average will be there. So it's kind of stuff you have to keep in mind, guys. Like I said, if you guys liked the video, don't forget to hit that subscribe button. Don't forget to pulverize the like button, help out the channel. That way we can keep posting videos for you guys. Because in our private chat, we're pretty busy over there, posting new stuff every day. Here we're doing, every 2 to 3 days. So thanks again, guys.